floor is yours.
Okay, thank you very much. Let's see if the technology works, the biggest challenge in any presentation. As Dr. Aman introduced me, I work for UN-Habitat. I actually lead the Warsaw office of UN-Habitat. This first slide of the presentation is definitely a backgrounder. It's really to show what is the scope of change that's actually taking place and in which we are in the middle of. The change of rapid urbanization, which is of course absolutely the key to the housing issues that we're discussing. Back in 1970, less than 40% of the world lived in urban areas. It was still less than 50% in the year 2000, and on current projections, by 2030, that's just 20 years away, 60% of people will live in urban areas. Okay, this particular trend is mostly noticed in developing countries, less so in developed countries, but nevertheless, rapid urbanization and a revolution in terms of housing demand, in terms of mobility, is taking place. Now, for the Central and East European countries, the countries that I deal with, also Dr. Aman deals with, there are certain very, very key challenges facing the housing sector. First of all, there's the price-to-income ratio, which is actually pricing people out of both the property and the rental markets. The prices have been pushed up in the last 20 years, markedly also by speculation on land. Basically, many players entered the market, rightly at least for a time, guessing that land prices would be rising, and therefore it's worth to hold on to your land and not to allow it to be used too quickly. The second big challenge is, of course, and anyone who goes to Central and East European countries will see this, is the deteriorating stock of the housing, much of which was built in the socialist era. And that's, if you like, contrasted with insufficient construction for middle and income lower earners. There is insufficient new construction for those particular income groups. The third challenge, of course, is that rental markets are small. That's partly to do with an inadequate legal framework, but it's also partly to do with the culture of ownership, which exists in most of the post-communist countries. It exists there for different reasons than in Anglophile countries. It's more to do with the search for some, at least, stability and security in a rapidly changing situation, in that it's an easily identifiable asset that people can have. The challenge that, of course, also is facing Central and Eastern Europe as much as Western Europe is the fact that despite the rapid urbanization, which you can see on this particular slide, the EU has found it very difficult to keep up with on the urban issues. Housing is not really that much on its radar screen. And therefore there is no real international effort on housing, no real European effort really so far going on. Okay. Now, of course, what has increased the pressure that's being faced is the financial crisis. I think we've already talked about this. Obviously, the crisis was not one of the housing market, but of speculation on the financial markets with regard to financing operations. It was a situation in which interest rates were lowered very artificially. Many shortcuts were taken in order to get people into the market. There was easy access to credit-inflated prices, and that actually led to heavy indebtedness. Of course, the reason why it happened was the price of the preference for ownership. Low interest rates were in fact a subsidy for creating a pool of homeowners. In the first part of this decade, prices were rising considerably faster, property prices were rising considerably faster than other goods. The demand for mortgage loans was increasing from year to year. However, of course, house prices could not forever stay ahead of inflation, as laws of supply and demand always kick in. And once a saturation point is reached, prices tend to fall. This has been fairly cyclical. Now, we've also talked at this conference about the role of the banking sector. The banks had surplus capital and developed instruments to spread the risk in the form of securitization. They packaged bundles of mortgages in order to reduce the risk. This was, of course, to minimize risk. The effect was a de facto pyramidization of the mortgage market in which the risk was underestimated and the value of the portfolio overestimated. The consequences, especially in the most advanced countries, of course, are very evident for all to see, with an increasing number of buyers failing to keep up with payments, indebtedness of banks. In 2008, mutual trust between banks breaking down and access to credit drying up. And of course, fall in property prices leading to negative equity. And of course, the poor results of the financial institutions partly led also to the stock market crash that we witnessed. The governments, as a result, have begun to search for ways and means to save the banking sector and to boost their country's economies in order to avoid recession. And the review of corporate governance, which we've also talked about in financial institutions, has begun. Of course, in Central and Eastern Europe, this was less marked for reasons that a lot of these instruments were only starting to be developed and not many people had yet used them. So we have escaped purely on the issue of time. I am convinced that all these instruments would have been used had the time allowed it. It's certainly very difficult to believe that we would have been in government intervention to prevent it. Now, what can be done? What are the lessons for the future on what can be done? On the housing finance front, certainly limiting the subsidization of credit for property purchase, because that just tends to drive up prices and actually make more people need social housing. Secondly, ring-fencing the mortgage market from other financial operations. I'm afraid, one of the old-fashioned people who thinks that the British building societies were a good idea, and they actually created a much more healthy housing finance system than has been seen of late. Encourage savings for property purchase rather than cheap credit. That's certainly something that's facing all governments. Create a condition of every mortgage payment having to be accompanied by a down payment. We had yesterday a very good contribution from a Canadian participant arguing how that has helped Canada to escape most of the ravages of the current problems. Removing the barriers to renting. This is a key issue of course for social housing. Reducing the costs of construction by easing access to land, investing in revitalization, streamlining procedures for housing investments. This is of course a huge challenge. Now, the conditions that really have to be created for affordable housing are, first of all, public investment in revitalization, energy efficiency and homes for rent, a land tax and property tax system which discourages speculative purchases, discourages empty properties, property tax system which is based on the ability to pay, which does not penalize improvements of small and medium-sized properties and which discourages the owners from keeping those properties empty. Obviously, mortgage rescue schemes for low and medium income earners to ease demand for social housing are an issue, and we are seeing such schemes being developed in Central Europe as much as in Western Europe. And of course, the EU taking the urban sector seriously, realization that housing is no less important than health or education in creating the conditions for social mobility and economic growth. The barriers that we are facing, of course, is the credit crunch, banks not lending money for construction, the revenue crunch, governments not being able to raise the tax revenues they need and facing a tripartite pyramid of debt, public, commercial and private, the income crunch, the individuals losing income as a result of unemployment or pay cuts and not being able to pay for their housing, and of course the political crunch, expenditure on housing perceived as having a low political return. This was portrayed rather neatly for me by a member of parliament from a country which will remain nameless, who said, if I lead to the building of a building block for social housing, maybe I can get 50 votes that way. If I get a road built in the vicinity, that's 1,000 votes. So it's obvious what I'll go with. Now, there are opportunities, of course, for the current crisis. First of all, the need of public investment to stimulate demand. That's being recognized, and housing, of course, is there on the agenda. There is certainly a need for better education about financial services for the public. That's an issue which maybe hasn't been talked about enough, but needs to. Closer scrutiny and more focused regulation of financial markets. Of course, it's here important not to throw the baby out with the bathwater, but nevertheless, that is an issue that's going to be tackled. Greater willingness to consider new ways of financing housing, and in a minute I'll talk about UN-Habitat's initiative here. And schemes that blend together grants, technical assistance and loans which leverage contributions of communities, local governments and the private sector. Now, the scheme that, the UN-Habitat scheme that I want to talk about for a minute is the experimental reimbursable seeding operations. It comes off a mandate from the Governing Council of UN-Habitat to create a designated trust fund for a certain period to test experimental reimbursable seeding operations and other innovative financing mechanisms. Basically, the objective is to field test experimental reimbursable seeding operations for financing of housing for the poor, as well as other objectives. But of course, there is the expectation of repayments, mobilizing capital at the local level. To strengthen, of course, the capacity of local financial and development actors to carry out those operations. So it's really a revolving operation that is being attempted here. Risk, cost and inadequate liquidity are the three key reasons why financial institutions frequently are not willing or able to provide financial services for low-income shelter solutions. The strategy is to test whether the mobilization of domestic resources for low-income solutions can in fact overcome these impediments. The key problems that innovative mechanisms are trying to address are the profitability in building low-cost homes, ensuring low-income households are the target clients, and that low-income households accessing private financial institutions, that they can actually do so. The challenges that private financial institutions face are liquidity, the insufficiency of capital available, the risk of non-payment, and the transaction costs. Loans are simply often too small. So this is the scheme that is going to be trying to address this. The support tools are, first of all, loans to local financial institutions to enable on-lending to low-income households, loans to set up guarantee and insurance mechanisms, and complementary financial or technical assistance on a grant basis. Okay, I'll skip the complicated chart. The targets for the moment, of course, are very, very modest. The number of ERSA operations will be 8 to 12 in total, 2 to 3 in each of the 4 regions, including here Eastern Europe. Envisaged total volume per operation is between $2 and $5 million, and up to $1.5 million per ERSA contribution. Envisaged private domestic capital mobilized per operation is between $1 and $4 million. The focus is on potential projects that involve capital investments and leverage domestic funds for poor housing, infrastructure and upgrading. The requirements are that it's potential to be successfully launched and showing preliminary results within a certain experimental period, availability of a sound domestic financial institution as implementing partner for seed capital operations, support by national and local governments, and existing relationship with communities. And the key issues here for the response are the developing and disseminating financing methodologies for affordable housing, governments developing pro-poor housing finance policies that will gain political acceptability, the application of universal standards and practices for due diligence, transparency and accountability, restoring confidence in the housing finance system and building a network for sharing knowledge and information on financing affordable and social housing. Thank you very much. I've tried to explain the very modest scheme that UN-Habitat is designing for financing social housing and affordable housing operations. This is of interest to Central and Eastern Europe, where the pressures on social housing are likely to grow in the coming years, and where it's still the market is not servicing those particular income groups. The lower income groups, the middle income groups are still not being serviced by the market as a result of the economic crisis, which will run for a certain period. The pressure on the social side is likely to grow. Thank you very much.